Hello guys, welcome to another video. I'm AD from Pixel Profits, and in this video I'm going to explain the concept of order blocks. What are they, how do you identify them, and how can you use them? Let's get started. So an order block is an area on the chart where lots of orders have been generated. People will also refer to the same areas where order blocks are formed as supply and demand zones. And whether you call it supply and demand or order block, it really doesn't matter. They often end up being quite similar, if not exactly the same. The main thing that causes small differences is where you draw them, how you draw them, the criteria and the rules that you use to do so. So it's generally expected that an order block, once it's formed, will support price action in the direction that the order block indicates, either bullish or bearish, in confluence with other factors that we'll discuss soon. So let's look at how to identify them. So we'll start with some bearish examples. This chart is basically the same chart that I used for my fair value gap video. So if you haven't seen that, feel free to pop over and have a look. You'll be able to use fair value gaps and order blocks in confluence with each other if you go and check that video out. And if you already know or have seen that video, you'll be able to start drawing the fair value gaps on here if you want to do that. We'll come on to that in a moment. But let's start with a bearish order block then. So we can clearly see here that price is in a downtrend, right? We've got lower highs, lower lows, lower high, lower low, lower high, lower low. You get the idea, right? So in this leg of price, we're in a downtrend. If you don't understand that, then feel free to check out my market structure videos. So, of course, bearish order blocks would be most suitable in a downtrend, right? So what are we looking for to form an order block? Well, the first thing we're looking for is for price to reach into some kind of key level or point of interest. So for example, we've got this huge fair value gap here, right? And if we look within that, we can identify our first order block. But it doesn't need to be a fair value gap. It can be a sweep of a high or a low, a fair value gap or an imbalance, some kind of inversion, inverted fair value gap, a supply and demand zone, or another order block. And from a previous video, I think we talked about this inverted fair value gap right there. So we have an inverted fair value gap and a strong breakaway gap, in fact, on this bearish fair value gap here. So you can see here we've already got a couple of confluences to start us off. Now, I'm on the 4-hour chart. I'm just going to stay on the 4-hour chart for this video so that it doesn't get too confusing. But of course, all these concepts are fractal. So if you go down to 1 minute, 15 minute, whatever, you'll find order blocks there as well. And you'll probably find order blocks within these order blocks. But let's look at how to actually identify this one on the 4-hour. So we need to reach into something, ideally. Now, it's not required, but it's best to use that as a confluence because then your order blocks are going to be stronger and there's some reason for them to form there. It's nice if we sweep some previous liquidity, which, I mean, we've taken out a lot of this here by going this up this high, but we've gone into this inverted fair value gap and the bearish fair value gap here. Then we want some sort of displacement to the downside, closing below a series in a bearish scenario. We want a series or single up close candle. Okay, so where do we see up close candles within here? Well, there's a couple of places, right? There is this series of up close candles here. Okay, and there's also this series of up close candles here. So let's look at which one we should use. You can use either one is the answer, but for me personally, this series of up close candles here is quite large, and when you see that here we close below them. Now you use the body of, it's hard to see that because it's so small, that candle, but use the body of the lowest in the series of up close candles before we get it broken through. And when we do break that, we call it a change in the state of delivery. Now, we can do the same thing here, right? We use the lowest body of the series of up-close candles before the move down. Okay, and we could also call that changing the state of delivery. Now, which one you take is up to you. This one is the one that reached up and caused the value gap inversion, all that stuff to get tapped into. But what we also have here is, if I draw this out, we've got an attempted uptrend, although it isn't an uptrend, and I'll explain why in a moment. But let's just draw it like that. Okay. So what we established already is that this is a downtrend, right? And in the downtrend, we expect a series of expansions and pullbacks and expansions and pullbacks and so on. So this leg of price here, although it's an uptrend, if you want to call it that, temporary one, it's only really a pullback to facilitate a pullback into this previous area and into these internal structures, right? These internal fair value gaps and stuff before the next leg down, lower. Okay. So what we get then at the top is we get this pattern, and we can quite clearly see that while we were having higher highs, higher low, higher high, higher low, oh, hang on, we've got a lower low. So what should have happened if we were going to continue this trend, right, is that we pushed up above there, we came back down into this previous area, and then we continue up again. But we didn't get that. We got this. So we can see that here there's a point of failure. So there's no reason for me why you can't take this as an order block. The only real difference is your level of risk and your entry, because this order block is so large, and of course we could go down to the 1 hour time frame and probably find a much more refined version of this, or the 15-minute or whatever, or the 1 minute, and find a really small order block right up in here. But on this chart, only using this chart, I would consider that this is quite a large order block, and I wouldn't want to use the whole of that as an order block. I prefer to take the swing high, swing low, failed high, and then I expect that after this has failed, this level is going to get broken, which we do. And you see we break it on that candle right there. Let me just zoom a little bit so you can see it. We've broken it with this candle. Now look what happens when we come back up, right? We come down, we validate the order block by closing below it, and we come back up. As soon as we hit that order block, boom, straight down. Because this is a sensitive area of supply and demand. It has a failure in it. It's inside this failed fair value gap that's now been inverted, and we know that those become resistance for a bullish one. And we have this huge bearish fair value gap in here as well. We've got a lot of reasons for price to go down. So this order block here can be a really good entry. If we entered on the change in state of delivery, as soon as the order block level is broken, we could put our stop, let's say, on this high of this range, and then we could target 2 to 1 or whatever. You can target these previous lows. If you understand market structure and you've seen my videos on that, you can understand that you could target these lows, because that is expected to be where we're heading in the future. So an order block then is basically just a series of up-close candles before a move down that breaks below them, causing a change in the state of delivery, causing quite often this sort of reversal pattern that you're probably used to seeing. You've got another one over here, right? Up, down, fail, down. Okay, we'll get to that in a moment. And it causes something called a change in state of delivery when these up-close candles are closed below with a body close. And then we expect some sort of revisit of the area, and that happens in the next candle, next 4 hour candle, this one, and then literally straight down. The same thing, if you want to draw this one and you wanted to use this one, happens here, right? We break below the body there, we break below, we come back up, retest the order block, immediately fail and fall down. Now, we're looking for bearish order blocks at the moment. That's a series of up-close candles before the move down. What if we were looking for bullish examples? Well, if we're in a downtrend and we're in a pullback and a downtrend and a pullback and so on, you know, an expansion, pullback, do we want to be looking for bullish order blocks in a downtrend? Well, we could do that to look for when the move back up is going to occur. But of course, they're going to be more risky and more prone to failure than if you're taking bearish order blocks that are in line with a bearish trend and bearish market structure and bearish points of interest, PD arrays, whatever you want to call them. Let's just focus right now on the bearish examples then. So when we come down here, whichever one of these you took doesn't really matter, right? Your risk to reward would be better or worse. Once we break down here, we get a new swing low and then a new up move. And what do we see here? An up close candle before it gets broken, right? So what is this then? It's a change in a state of delivery, because an up close candle that caused either a sweep, which this candle did sweep the high of that candle, but it's also, what's it tapped into? Probably realized now, this fair value gap, right? So now we've got fair value gaps within fair value gaps and all kinds of stuff going on here. So that's great, but let's move them to the side for now. What's this here? An inverted fair value gap. Okay, so again, here we have some confluences to look at. Now, we don't tap into the inverted fair value gap yet, but what we do after making this up move is tap into the fair value gap that was created after this candle. Okay, we've tapped into a bearish fair value gap. We then come down, we close below the body of the last or series of up close candles that caused the sweep, caused the point of interest to be revisited, and then we break below here. Now, what would happen if we did an entry? You could take your entry from the change in the state of delivery, okay, which is this candle here, right? Stop loss above the high, although you might want to, in this case, cover the fair value gap, and then down. So you can see that if we entered as soon as we got the close here, we tap back in there as well, I believe, and then we drop lower. So we've got two chances to get in there. Nice trade. Okay, so these series of order blocks, bearish order blocks, are often referred to as a propulsion block. And what that means is it's basically a second order block coming off of a first order block. And if we'd used the first order block from this level here, right, what have we done here? When we create this order block, we've tapped into, in fact, the first order block and then fallen down. There's tons of confluence in here to support our ideas that these bearish order blocks are going to hold up. Now we continue down, we get some sort of apparent market structure shift here, but again, if we're in a downtrend, expansion, pullback, this leg we're expecting to only be a pullback if we follow market structure. We're not expecting it to go higher and higher because then the trend has changed. So if we're expecting a pullback, well, what sensible area would we expect a pullback to occur if we were down here? Where would we expect a pullback to occur to? We've broken structure here. Normally after breaking structure, we expect a pullback. We're going to pull back somewhere. Where would it be a sensible place? Well, right into this inverted fair value gap and this bearish fair value gap here, which has been touched, but not very much. So we'd expect a deeper mitigation of that fair value gap now. And where do we go? Straight into both of them, right? And into potentially our other order block that we drew from this change in the state of delivery here. Now we're inside a previous order block, inside an inverted fair value gap, which normally offers resistance, right? We're inside a bearish fair value gap, and look what happens. We come up, we touch here, and off we go, making a new low as expected, breaking through structure because we're expecting a downtrend to continue, right? So, see, we've got lots of confluence now, right? Look at that. Perfect. So, in fact, no, we didn't quite tap into this order block here. But that's okay. Don't really want it to if we're going to continue a downtrend, although it could. You know, this supply and demand area in this previous, again, inverted fair value gap. But what are we looking for then? So we're looking for a series of up-close candles that cause a sweep, cause it to go into some sort of point of interest. And again, we've got a couple of options, right? Because we're on a 4-hour chart. There's so much action within this area. We've got this obvious one here, and we've potentially got this, because this caused a sweep of these highs, right? It's an up-close candle. It's gone into a points of interest for a second time, in fact. And what's it done again? It's failed to make a new high, and then it's broken structure. So we've got a pattern again, a reversal pattern, failure to make a new high. We're expecting a drop. And of course, as soon as we fail, we get that drop. So where do you want to have your order block? Again, up to you. You could take either of these, regardless of which one you take. Because we're waiting for the close below, this one candle closes out both of them. So once we get that close, we're normally expecting a revisit of the order block area. But we don't get that, at least not in this leg. So if we just draw out this order block, this entire thing, see what happens over here? Here's our revisit of the order block, and here's a little drop down as well. But it's not going to be perfect every time. You're not going to get tagged in every time. And of course, if we again dropped to a different time frame, like the 1 hour, we're likely to get tagged in on this one. It's just on the 4 hour, we don't, because it's just one big candle going down. But that big candle there, the 4 hour candle on a 1 hour chart or a 15-minute chart, is all sorts of stuff, right? It's a range. Okay, so we'd likely get tagged in here if we drop to a different time frame. But I just want to focus on the one time frame for this video. So you can see that order blocks get good reactions. Now, what about a bullish order block then? Well, let's go down here and see if anything's going on down here. So what have we got over here? We've got a whole bunch of significant old lows, and we also got an old fair value gap here that's been touched a few times. Look. Okay, so we've got some areas of interest. We could consider this one as here. We could consider it definitely as mitigated, right? Because it's been closed through. So it's an inverted fair value gap now. We've got that inversion from the left side of the chart. What else have we got? Well, we've got all kinds of fair value gaps now getting inverted within here as well, right? So for an order block to form in this area wouldn't be out of the question. Plus, we've got this downtrend, and we've had a break of structure here. Again, if you watch my market structure videos, you'll know after a break of structure, we expect some sort of pullback. Now, what we expect then is a pullback into a previous zone, and then a continuation lower, and so on. But what we actually get here is another failure. Where we were seeing failures on the top side, what have we got here? We got a failure on the bottom side, right? A failure of this high to make a new low. So what do we expect now? Well, you can see it here, right? We're now starting potential uptrend. Now, we're not confirming that it's an uptrend until we break this old high here, but we've got pretty good indication that due to sweeping all this stuff down here, all these inverted fair value gaps that are happening, liquidity being taken, and all this other stuff, and this huge fair value gap here, okay, something might be going on here. So it wouldn't be out of the question to start looking for a bullish order block in this area. So where would that be? Well, when we've got a series of up close candles that get closed below, now we're looking for a series of down close candles that get closed above. So up close candles get closed below, down close candles get closed above. So where does that happen? Well, the most obvious place is here. Now, some people will take single candles as order blocks, even when they're in a series. Yeah, okay, you can do those things. It's discretionary. Whichever one you took here, you'd have got a trade. Because now we have our change in state of delivery, right? And we've got another one right here. So again, if we'd taken a trade from here going upwards, right, after we got a close above, we came back down, retested the order block. So that would look something like this. You have your stop maybe down these old lows. It's covering these sweeps here, and we target whatever. What we're expecting is some sort of, at this point, maybe a pullback into this area. So let's not get too greedy. Let's say 2 to 1, because we're not confirming the trends change necessarily here. But yeah, there's your 2 to 1, right? Straight in. Also, if you'd gone from this one, then you would have got a decent trade out of that as well. It would have just taken a little bit longer to get to a 2 to 1, but eventually you did. So when you get this series of candles here that are large, right? It's a large area. What you can do is get whatever you can get a fib tool, you can get a rectangle, and you can draw from the bodies, okay, from the body of the top one to the body of the bottom one, and here is then our mean threshold, our 50% level of that order block. And if you'd entered there instead, you'd have got your 2 to 1, whatever you're aiming for, by here. So when you get a large order block like these ones, especially this one here, even without switching to another time frame to refine the order block, you can actually measure out using a fib or a rectangle or whatever. You can measure out the bodies to the bodies, don't worry about the wicks, and then take the 50% of that as your mean threshold. What we don't really want to see is too much of a closure below the mean threshold after we've broken out. And of course, we don't even get that anywhere near. Okay? So that's another way you can do things. So we've established that when we're using an order block to enter, we can use the change in the state of delivery, or we can use a 50% level as a mean threshold if it's a large order block. The difference is basically going to be that on the change in state of delivery level, you're likely, as in this example, to get tagged in, okay, because it can often revisit that and it'll be a sensitive area and it will go. But your risk to reward will be worse and you'll be waiting longer to get out the trade. Whereas if you use the 50% level, there's not a guarantee you're going to get tagged in. Now on this one, as you can see, probably if you look over here, is that you do get tagged in if you use that all the way over here, and then you get a trade out. The problem with that, of course, is that you almost got stopped out. And it's risky after all this price action, because we haven't confirmed, well, we have actually, once we've closed above this high, we've confirmed, in my mind, that we might be starting an uptrend. But after breaking structure, you're likely to get a pullback. And we got a pullback all the way down into this order block. And if you took the mean threshold of that single candle there and draw it out, you tap right into it, you respected it, you've gone back up, you haven't closed below it. So that's also a legit trade, right? So what makes an order block strong or high probability? A sweep of liquidity is good, a key level being tapped into, another order block being tapped into, or fair value gap, or whatever it is, old highs or lows, and the mean threshold being respected. Now, one more thing I wanted to just mention quickly is what you'll often see, I'm just clearing some of this stuff off so we can see what we're doing. What you'll often see is when an order block forms, you'll get a number of things. Number one, a sweep of old highs or lows. Number two, inversion. Number three, change in the state of delivery. Number four, you often get a market structure shift, which is often the same thing as a market change in the state of delivery. It's not always, but it can be. So you get a bunch of stuff happening. You can also have FVGs being formed. So you can almost follow like a system, if you like, to identify, okay, number one, we've got our sweep of liquidity to the left side here, right? Here. Number two, we've got various inversions here. We've got one here. All right, we've got another one. Let's see here, a very small one there. I'm not going to draw them all out. We've even got one here, right? So we get inversions. The inversions usually happen before this change in the state of delivery, but they also happen in here after. And in fact, looking at that, it's quite a nice entry level there, isn't it? Look, it bounced right from there and the order block threshold there. So, yeah, nice. Change in state of delivery then happens. Market structure shift. Probably most people would say that this was your market structure shift level. So it generally happens after the change in state of delivery. Get a market structure shift. And that just means it's broken a previous swing high, if you like. So it's a more significant break of structure than just the change in the state of delivery when the order block forms. And then you've got, various other things, fair value gaps and stuff. But what I'm trying to explain here is that you get a series of things happening, and you get that sweep, inversion, change in state of delivery, market structure shift, and all those things in pretty much every situation. And pretty much it's like a formula for the formation of an order block. So we've covered order blocks. Bearish versions are up close candles or single up close candle that get closed below, causing a change in state delivery. A bullish version is bearish candles that get closed above, causing a change in state of delivery. I think it's pretty straightforward, pretty simple. All you need to remember, look for them at key places, key levels, key times, whatever. Have confluences for them forming, and understand why you're picking one, because if you just pick any random thing on the chart, you're likely to fail in the end. Let's have a look at one more bullish example then. We come up, we have a series of down close candles. Do we close above the body of the highest one? Yes, we do. Right on this candle, just about closes above, and then this one obviously does as well. And then what happens? We come back down, we revisit. What do we have here? Some of you already spotted it, I'm sure. A fair value gap, bullish fair value gap. Tap back into that, tap back into the order block, respect the mean threshold of the order block and of the fair value gap, and off we go. And you can see the same thing like happening over and over. Now, this order block would have actually got closed through, but why? Well, we hadn't tapped really back into this one yet, had we? Once we came out of it, we hadn't tapped back in anywhere until here. So if you took this order block and tried to trade out of that before this one's been touched, you're taking a little bit of a risk, right? So you sort of want to see things be used before you start taking one that's further up, because if it hasn't been used, it's a little more risky, let's say. And in this one here, we have used the previous one, right? And we've gone into this fair value gap, which has been used to support price higher. So you've got multiple things, again, right, telling you fair value gap, break above, change in state of delivery, no inversions there, no, nothing there that I can see. That doesn't matter, it's not required, and off we go. So, and the same thing here again. There's more order blocks here. Look, close above, tap back in. Let me draw that out for you. Close above, tap back in, off we go. So order blocks, fair value gaps, great stuff to use, can provide you lots of good trading opportunities as long as you use them in the correct way. I've covered quite a lot of stuff in that video, things that maybe people put into separate videos, but I kind of want to have one video that says everything. So I hope this has been helpful. I hope it's been clear. Let me know either way in the comments below, or if you have any questions. If you've liked this video, leave me a like, subscribe, hit that notification bell, and hope to see you in the next video. Take care, guys. Thanks for watching.